Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Monday. And we're here at the 7th of February, 2022, and we're getting on towards 6 p.m. Central Time. So as we look at the markets, they sold off late in the day as Meta, Facebook, got hit, and it carried a lot more of the markets down with it. Now, as the market comes in tonight, we're getting a little bit bounce off of that. The market that was more interesting, though, was the gold market today, back into the 1820s, certainly reinstating for the time being some bullishness. I'm noticing in the gold, for those of you that watch cycles, you got a 20 and a 72-day cycle at work in the market. Just let you know if you pay attention to that. In the energy markets, we backed off a little bit here. There's talk that the Biden administration is starting to give ground to make a deal happen with Iran. I know no more than that, other than certain sanctions were waived to allow certain of the other parties to do things with the Iranians in civilian nuclear areas, as I guess a step forward by the Biden administration to show something. But the Iranians said it's nowhere near enough, and if they're going to stay with that, they're not going to get anything because Biden will be out of office if he just caves into the Iranian demands. I don't see that. That's my own guess. I can imagine the backlash in America would be immense, not something that he wants to do. But I don't know enough about exactly what's happening other than what the Iranian demands are, and they are very clear. All sanctions off. Would you do that? Bonds and notes, sort of flat right here. Bitcoin, nice rally, got up to that 18-day average, things we were looking at. Dollar still a mixed bag. So let's take a look at the charts. And before I get too far, this coming Thursday, I'm going to hold a live webinar. I begin it. I actually open it at 12:15 so you can get in, get your seats. It's first come, first serve, and the seating is limited. So you do hit the threshold and people get locked out. That's how it works. As you do that to get in, by the way, if you didn't get my invite yet, just take your cursor right now, move it up to the top here. Icon will appear. Click on it, fill out the form. You will get then, once you fill it out, your user ID and password. We change those each week. So that'll get you into the webinar and you get your seating. Okay, gold continues to do the thing that I've been talking to you about for a while. It's drifting against the 18-week moving average of closes, which is now 1807.50. When you look at the chart action, you can almost define your top and bottom in the market in this one swoop that carried it down, and now we've carried back. When you put on the market the swing line study, the pattern is one of higher lows and higher highs. That's bullish. When I put on the moving averages, what the market did is it plummeted, as you can see right through here, got through the 18, the 200, the 100-day average. So the question is, what held the market together? When I put on to the next chart, the Bollinger Bands, you get to see what it was. I've removed the 200-day because there's so many lines you don't need it. You saw it earlier. But as you can see right here, that's what you hit. And then the market started climbing back up like this. 200-day average would have been right here. And now the market, watch, is coming through everything, and it has stuck itself back over the 18-day average. So for the purists, the trend is up. The bias is up because you're over the 18-day average of closes, and momentum is pointing up. It's all systems go with one heck of a risk. If one were a buyer here, the risk has to be back under the 1788 area. That's a little bit rich in the tooth. Let's assume the market wants to go up. One of the potential targets is certainly this old area of highs at 1858 that I've talked to you about in the past. I think ultimately the market is going there. I think inflation is strong enough. I think the chart action looks good enough, and the weekly chart action is starting to look better. But thinking it, risking that kind of money, that isn't something I'll be telling people and my clientele to do just yet. In the gold-silver ratio, you can see silver's working its way back down. So the idea that up here, the 80.5, 81 zone, that is a resistance area. We've been there, done that. The question is, can it get under 78.35 and accelerate to the downside against the gold? That would give silver an edge to the upside. Silver today negated its downtrend. If you come back with me, this is how the market looked coming in, and this is Friday's close. Lower highs, lower lows, oversold. Resistance, the combination now of the 18 and the 100-day average. If the market takes out this high right here, which it did today, that negates the trend, so now you have a lower low, higher high. With that resistance point, we'll see if when we come in the morning, is the market strong enough to get up to it, and what does it do once it does so? In the copper market, the Chinese are back from their lunar holiday. They started today again in the market. It held its support at the 18-day average of closes, but as I've been pointing out, do you disagree with me? Look at how often it's just hitting this. This market keeps going back and forth. I did a study today to show my clients light vehicle sales. I don't know if you saw what January numbers are, but they exploded. That's not to say that other car sales aren't hurting because of chip shortages. They are. Ford has closed 8 plants, Mexico and the United States, maybe even one in Canada. I didn't write them all down. And primarily they're cutting on one of them, even the F-150. That is popular as can be. But most of the others are automobiles. But they are throwing their weight at these light vehicles, and that's why those numbers pop. Now, when they pop, what you get carried with it is what? Catalytic converters. So platinum fell back down, holding the 18-day average, and the correction in the palladium, well, that's about all that I was looking for. A challenge when it lost the embedded reading on Friday, and that's when it lost it, to make a run for the 18-day average of closes since it's already under the 100. I got all that I care. I don't care if it hits it exactly or not. It did its job. So now the battleground is it's got to reformulate whatever it's going to do. If it closes under the 18-day average, it even gets more bearish. Can it re-embed? No. It's got to go through that whole process. So it's a market that, for the moment at least, I think is somewhat out of favor. In the dollar index, was this enough, the green line, which is the 100-day average, to stop this break? It certainly did it back here, and early on, it's acting like it wants to do it again. So I'm paying very close attention to that. You're void of a trend. You have a higher high and a lower low. You're oversold. The bias is down. But, let's assume you want to get bearish. Where would you put a stop on a trade like this? All the way up there? I don't think so. That's the only spot that makes sense. And to be a buyer, well, when you're down like this, why are you buying it? Where would you put your low? Are you going to buy it against the 100-day average, and where do you put that stop? Under the last break low here? I don't know. That's why it's not a trend trade. The market is sort of stuck right here. And that's what we're going to talk about. What's going on? If you think about what Facebook is doing, there's lots of articles today coming out with the values that Facebook is getting overdone. With all this blood, it's probably a good buy. Do I know? I don't know if it is or isn't. I know the mathematicians are coming out, looking at it, trying to see what's going to be there. Peloton deals, all these things we're going to have to talk about. And, of course, the world events that are all going on. So we cover them. We cover the futures market and the like. And there's a bull market going on in the futures markets. You should be looking at the price of grains. They've been taking off. Will they get corrections? They always do. Always do. That's just how it goes in. People pile into these things. They get ahead of themselves, and away you go. We have a huge report in grains, too, this coming Wednesday. So we'll be able to talk about all this come Thursday. You want to protect yourself from going into these reports. My webinars are fast. They last 20 minutes. You send me your questions ideally ahead of time. I prepare the charts, and away we go. All you need to do is, if you haven't got the invite, means you're not on my mailing list, go up here, click right up there. You'll see an icon. Click on it, fill it out. You'll have your invite. I'm Ira Epstein. You have a good day. I'll talk to you all tomorrow.